All right, welcome everyone. Today is Tuesday, January 23rd. We are in a live session. We have few of our Discord members with us. This is very good. We're going to go live and see if there's any questions that we can answer as we go on. We're going to talk about our new, not new, but the new version of the spreadsheet. And for those that you are not familiar with our spreadsheet, we keep improving it, and we're going to continue to do that. We're going to take into consideration your input and ideas and things like that. And it's really my goal to create like the one master spreadsheet for trading that everyone can use, whether you use my strategy or not. So right now, I'm like concentrated on making it work for my strategy. And after that's done, or at least close to being done, I might start adding other strategies that you guys are trading and would like to have them, so that you can have everything in one place and you don't have to go, from one spreadsheet to another one. You can have your performance all linked in and everything. So before we jump into actual live trading, let me just go over a few of the improvements that we're planning for this version, and then this one will be released very soon. And then we also going to be adding something else, but I don't think I'll be waiting for that other piece, which is basically tracking realized profit and loss, because I realized that not everyone dedicates the whole amount or whole net lick to the strategy, and it's kind of hard for you then to keep track. If you're just looking at the performance track here, you would basically have to use your net lick. But if you say, for example, you have a net lick that's whatever 100,000, and you want to dedicate 30 or 40,000 to this strategy, that's very hard to do. So what I'll be doing, I'll be making a realized profit and loss tracking that will then take your specifically from the naked puts, put debit spreads, hedges, and things like that. Will take the specific profits and losses from those trades, and then just count that against whatever amount you dedicated to the strategy, and then you'll be able to know how you're doing on that piece of your account. So that will be coming soon, but I'm not going to hold up the new version for that. In the new version, I have here, we removed some unnecessary columns in the main page. We added fees for some, because some of you are trading the SPX, SPY, and XSP. So we added the fees for that, and so that's going to make it a little bit easier. We added a hedge tab for recording all of the hedges, semi-hedges, and short harvesting. And this is what it looks like. So basically, you'll be able to select, let's say you have some amount dedicated for your hedges. You will be able to say, okay, I'm going to just harvest a short put from a put debit spread. And then you're going to populate this, and then this will transfer over to the main sheet. Or if you're going to go ahead and do just a long put or a rolling put, which is a hedge that I'm working on, which is basically just rolling weekly some long puts, low delta puts, but I need to fine tune the parameters for that before we go ahead with that. But this is going to be very handy for you to keep track of your hedges and cost and what you're doing. And then let's just take a look here. Put debit spreads, commission, and fees are now included in the main tab and accounted in the ratios. The old main tab is now removed. There is no need to keep two separate tabs for the main tab, because it's very easy. You would be using the old main tab basically if you want to be doing just scheduled weekly trades. And if you want to do that, it's still very easy to do it on the new main tab. Basically, you just look here, and let me just put this yellow thing here so it's easier to see. You would just be checking your weekly target premium, and then you would be trying to sell close to that amount. And if you do that, then the spreadsheet will automatically give you a weekly schedule. So there is no need to keep track of the separate, the main tab. So that's on that. And then I updated notes, because as we were doing different versions, some of the notes got in the wrong place or were describing the wrong things. But now I updated that, and there's a lot of explanations everywhere where, pretty detailed explanations in every cell, so that you know like what the cell is for. And if you catch any mistakes or something's missing, you need a better explanation, let me know, and we'll work on that. And then, okay, I removed PDS harvesting calculation. I know if you followed what we were doing before, we said we were going to do PDS harvesting, and we're going to allocate certain amount of that. I realized that's not the best use of our money and of the main tab. So instead of that, we're gonna default back to yearly hedge allocation, and we're gonna decide whatever you feel comfortable. Larger account will hedge more, smaller account will probably want to hedge a little bit less, and then whatever the amount you allocate to yourself for that will be split into weekly hedge budget, and then once a week, most likely, or probably the easiest, once a week you'll be utilizing that money to put on some hedges, and then you'll decide what's the best use of your money. Some weeks it might be just harvesting some short puts out of the put debit spread. Sometimes if the VIX calls are pretty cheap, you might decide to buy some VIX calls. The different ways to hedge depending on what you're hedging for, and how much money you have available. This is now simplified on that main tab. Then added notional exposure. I want to make sure that everybody is aware of how much risk they're carrying, because it's easy to put any number, any percentage that you want to target as far as a yearly return. But it's easy to get carried away and take on more exposure and more risk than you intend to. So I wanted to make it very clear and accessible right here, notional exposure over net lick. So if it's reading here 15 and a half, that means that my notional exposure is 15 times larger than my net lick. And you can see that's coming here from this page, because I currently have 4 open ES naked, and that is carrying on 840,000 of notional exposure. And this does not take into account any of the hedges. We're not reducing it for any hedges or something. For right now, this is just the plain number. I just want everybody to be aware. And whatever your comfort level is, you might add it to your own rules, because you don't have to follow my rules exactly. You have to actually, I encourage you to think what's more acceptable to you. So if you're getting uncomfortable over 15 times net lick in exposure, maybe you put a rule for yourself that says, I'm not going to put any trades on if I'm over 15x. Any questions on that, guys? No? All right, good. Let's continue, and then remove PDS protection number. Another thing to prevent any overconfidence and accidental overexposure. You know how on the previous main sheet we had here something that kind of suggested that the put debit spreads would bring in certain amount of premium or profit to offset your losses on the full book wipe, or any stop losses on your naked puts. Now that's still the case, but I don't think it's smart to say that that we can project what that amount would be, because it might give you overconfidence, thinking, oh no, my put debit spreads will cover such and such amount. I want everybody to know that right now you have, for example, I have close to $10,000 in total value available, and then I have to judge based on how old those put debit spreads are, how far away from the money they are. I need to then judge what do I think they would bring me in case of a market going down and some of these naked puts getting stopped out. So I might say, you know what, this is probably going to bring me 5,000 or something. Then I can take a look at my full book wipe loss. So this is right here. So right now, this full book wipe loss means that all of my open naked shorts are stopped out at 200%. I went down to 200 instead of 250. I want to keep it clean, because some people would go for 250. It's probably not necessary. There is slightly more long-term advantage to going 2.5, but you do have to take on a larger stop loss, and I don't think it's necessary. I think we can keep it clean at 2x, and then that would bring me to around 8,000 in loss. Now, even if the market goes down, doesn't mean all of my naked puts are going to get stopped out. Some of them might, but not all of them. But if all of them get stopped out, I would be down about 8,000, and then I would probably recoup some of that from these put debit spreads. I don't know how much, but let's say 5,000. So I would be down something, and I can then take a look at what the full book wipe loss represents as a percentage of my net lick. and I want to see that I'm comfortable with that loss. Now, the important thing is to remember, and this is with any strategy, is that yeah, we can say 200 or percent or 2x loss or 3x loss. It doesn't matter. In perfect world, that would be correct. You would be able to do that. But sometimes when the market is going down really fast, you might not be able to do that, and you might end up closing it at 250, 300, 400% maybe. But hopefully you would stay as close to 200 as you can. But this is no guarantee. There is no guarantee that you'll be able to close all of them. So what we want to do is have some hedges that would offset that. So those would be some maybe long naked puts. And the way to get them is basically two ways. You can either buy straight buy long put, or you can close a short side of the put debit spread that's already matured, and that will leave a long put. In my case, those would be in MES if I do that, so they would provide less protection, but they would be cheaper, obviously, to buy. And as we go on, I will be doing some of those so we can actually visualize that as well. Just another thing before we go to the platform. So I also separated, because we used to have the T-bills or whatever income you would gain from your T-bills or T-bill ETFs. We had them on the main thing here, and then that would be subtracted from the yearly target. Now that might get confusing for some people, and then also we don't know, and we can't really project what the interest rates are going to be doing in the future. So I think it's better if we keep the strategy clean, our targets clean with the strategy, and then just count that we'll be trying to get few extra percentages on top of our income here on the unused money. And I'm currently using bill and just parking around 60% of my net lick roughly into bill and collecting a little bit of interest on that. I have some ideas how to improve that potentially a little bit, particularly when maybe in the future when bill or any T-bill ETF is not paying 4 or 5% per year, when the interest rates go down, we'll be looking for some additional income. So I'm looking into some options to maybe bring a couple of percentages there. But here I want to keep this very clean target yearly return. And remember, this target yearly return doesn't mean we're going to get exact that money. We're just assuming that these assumptions as far as estimated premium capture rate and win rate and all of that is roughly correct. In that case, we would sell enough premium to be able to achieve around that goal. But this is just to give us an amount that we should be selling to keep steady schedule as we go on. And if this estimated PCR proves to be higher, we'll adjust it. If it proves to be a little bit lower, we'll adjust it. But just to give you an idea what that is. All right, I think we covered lots of changes here on the thing. So let's go and take a look at the platform. And I already pre-populated this here with today's date just to see where we stand. VIX was at 13%. Our delta and theta are 47.49, which is pretty low, 0.09%. Now, and as I said before, I'm not too concerned with my theta in particular. I know I have theta, whether it's showing here or not. I know because I'm selling a certain amount and I'm spending a certain amount. I know that there is theta in the account going on that would allow me to achieve whatever goal we set up. But sometimes it's going to show higher or lower. I'm not too concerned with that. I'm not going to be putting on trade just because theta is low, or I'm not going to be taking trades off because theta is high. And the same, but to a little bit lesser extent with delta. I'm keeping an eye on delta. Now, if delta would get out of hand, if we get too exposed to the downside, if this would grow to some large number, 0.4 or something, I might, think about maybe posing or something. But I generally don't try to manage actively the delta too much. Buying power is important. We don't want to be facing any margin calls. So at 18%, we're pretty good, and we are okay to put on another trade. net lick 554,400 when I checked it a little bit earlier. So we're going in the right direction here. Everything is fine. And as you can see here on our naked puts, this is from the strategy. They have been falling off at 60%. I have a profit take out, like a good till cancel order, and they've been closing on schedule. And usually they've been staying open for less than 30 days, although the last one was 34 days. So when the market is going up, we'll be closing them before schedule, and when the VIX is going higher or market is going down, we'll be staying in the trade a little bit longer. But everything is fine here. We are good. We have 4 trades. We're gonna put another one on now, and as per our plan, we don't have to worry about too much. Trying to hit anything at the moment. We just go to trade and open. And just one slight, not improvement, but just a clarification on the trading plan. I made it a little bit more robust when it comes to DTE, just to make sure that this is basically, I'm saying now 90% for our naked puts, 90% without going under. I don't really want to be shortening too much other 90%, and I don't mind going to 100 days if needed. And then the opposite for the put debit spreads, I want to go closest to 90 without going over. So in this case, instead of going to 87, I would be going to 98. And we go straight down to around E delta and see where we at. So this is what we get. We could wiggle between, depending on the open interest, and if we have any other open trades, we can take a look here and see. Okay, this one would be paying us 887, and I think we can go to 9 in this case to collect a little bit more. We're still in where we want to be. So let's see if we can collect. Let's see if we go just 20 and a quarter. We'll just pedal back if needed, but we can always try. It takes us just a couple of mouse buttons. Replace. We go down to 20. No, it's going down 1987, so it's not gonna give us that. So let's go one more down, and let's go and close this. Actually, we should be good. So 1975 is what we got. So if you remember the rule of thumb, it's very simple. To get 20%, we just go to MES, and we would go to 87 in this case. We go to around 35, and we go 75. Now we don't want to do this because there's 2 longs here, so we're gonna have to play around. And we said we collected, let's just take a look, 1975, so we have a little bit of room on that. And let me just remove this, and let's see if we go a little bit up to avoid this. This is good. And let's go ahead and do 2 of these. And actually, yeah, we are back to 20% because we have a full book, and we're now doing 20% plus whatever hedges we're doing. So let's see if we can get this filled, and let's go to 1850. Let's see if we can. We're gonna have to go up a little bit here. We go replace. All right, so we're filled at 1875. And let's go record that into the spreadsheet, and then we'll go from there. Naked puts. So we're gonna call this one 42. And as you can see now here, we have all of these available. So ES today is 20, what is 23, 124. Don't forget that we go day, month, year. And then it was 43.50, but I'll double check that. 43.50, yes. And it was, oops, again, it was 98 days at 1975, 98 days at 19.75. what did I do? I'm sorry. I have typed in the wrong. 98 days, 1975, and we did one of those. All right, so as you can see, our notional value exposure increased. We're probably looking at closer to 20, yeah, right here, 20x. And so that one is recorded now, and then we go to PDS. We're gonna call these 43. They are in MES. Today is 23, 1, 24. And let me check the 4850, 4850, and then 4775. And this was in, I think, 87 days. And we paid 1875. So minus 1875. We did two of those. And all right, this is now recorded. So let's take a look at our hedging. And let's take a look here. So let me see. I'm still working on these numbers. I don't know if I want to be hedging 5% a year and going 20 or maybe 22 and 3. That can change. Nothing is, permanent. We move and we change things as we see fit. Right now, let me go ahead and put this at 20 and put this one at 5. One thing you don't want to be doing is adding a lot more yearly hedge allocation and then also adding yearly target return, because then you're just kind of chasing your tail in the around, and you add more hedge, then you have to sell more if you also increase the yearly target return, so your notional exposure keeps getting higher and higher. Of course, if you have some strong hedging system like Sweet Bobby uses, maybe something we can look into, or something else, then you might want to take that into consideration, maybe expose yourself a little bit more if you have enough hedges. But right now, let's see, at 52, actually, let's just go 0.03, and let's go with 0.2 here for now. So we're looking at a weekly target premium, probably around 890, 900 or so. That will change as the Netlick goes around, and we could be spending, $30 for a hedge. So what would we do today if we were doing it today? We might as well go ahead and do one for now. In the future, maybe we can dedicate a day just for hedging and maybe rebalancing of some other things and stuff. It doesn't necessarily have to be on the trading day. But if you're doing a trade once per week, you might as well do hedging once per week. So I think in my case, probably the best use of my $30 would be to take a look what I can close here that would bring some protection. So for example, here, if I close this has around 30 bucks in extrinsic value. That's plus some commission. No, there is minimal commissions on closing with Tasty. So I could close these two, and this would leave these two long ones at 24 days. Let's see, that would give us a little bit of buying power back. Let's see how much. About $1,000 back. And so that's potentially something we can do. Let's see if there is anything else interesting. So this was at 24 days. This one here would be 37 days for about the same amount of money. Let's see what would closing this one give us, just to compare a little bit. 500, yeah. So looks like we're probably better off just going with this one here and closing this. Let's do that. We'll probably have to pay a little bit more, but let's just give him 5. All right, 315. So now we have to find that actually, let's go here to hedging. I have to get used to this tab now. So this this is actually not correct. I was just testing something, so there is nothing in here as of right now, and same in here. This is just okay. So we would say here short harvesting. It was an MES, and they opened, basically would be day close in this case, just 24. Main strike, we could some of these things are not necessary. I keep them for tracking purposes and analyzing later on, but maybe, you know, like we would just put one strike here, that so that we know what we did in this 4425. So let's do that for 4425, and we're going to put 0 here just so that it's automatically calculated the profit and loss, because this is closing the trade, so basically 0. And we paid minus 3.15. It was 2 of them, and commissions are actually not. We'll just change the formula here. Doesn't take into account that this is just closing, and so we'll just put a dollar. I think I have to see. I think it's maybe $1.50 for 2 of them, roughly. Let's put that 150. Okay, so you can see this cost here. So in the future, this cost, once we have this new tab, this cost would transfer over to your realized profit and loss. And right now it's carried over to the main page for the trailing budget difference, and it's part of this formula here to make sure that we are spending in line with whatever we allocate here. So looking at the account now, we can go ahead and redo this. What I like to do is I do this once before I put a trade on, just to see what the metrics look like. And then I go back and then I redo it after I've done the trading, and then leave it until next time. So let's do that real quick. So VIX 1295 practically unchanged. Our delta and theta must have changed. So 81 and 64, 81 and 64. Buying power, we go here, and then we refresh this just to make sure that it's 24.7. We don't count this bill here. That one we can sell at any point, and that doesn't bother us. So 24.7. 24.7. So you can see the new trade brought in about 5% roughly, and then we took off 1,000 with that little hedge, and that's it. We recorded that. Let's take a look, because I didn't do the update and review video. I was on holidays this weekend, so I didn't do my usual weekly update and review. So let's take a look here. What happened on the 19th? We actually were 54,607, and here's the graph for that. And year to date, we were at 2.85 for those first few weeks. So everything is, let me see here. Yeah, 2.8. Yeah, that's fine. So that's perfect. I mean, if we can keep this tempo or anywhere close to this, we're golden. And I think I covered everything. Anybody wants to jump in and share any thoughts or any questions? All right, I'm gonna then pause recording. We can then just finish up, but I'll cut it off here. All right, everyone. Thanks for watching. Make sure you like and subscribe if you found value, and join our Discord. The link will be in the description. And come join us, and you can participate in these live videos, live trading videos. And then I'll see you next time. Thank you very much. Actually, let's take a look. When is our next scheduled trade? It should be in a week's time. Right, Tuesday, January the 30th. So yeah, next week, Tuesday. See you then.